Hello, it's Andrew Bell here. Well, we're starting to feel the cooler temperatures, of course. It's so much better than the southern parts because our winters are just beautiful, but it's cold. Two really important pieces of information today. First, the latest GDP figures, out just over a week ago, showed the Australian economy barely grew in the March quarter, just up 0.3% for the year. It was boosted by household spending on essentials like electricity and gas. And that's a terrible way to see some boost in the GDP. But it was good to see private sector investment rise, led by housing, construction, mining and manufacturing. But overall, pretty dismal figures. And of course, it shows that we are not far off negative growth. Now that's been threatening for some time now, which is why we did see the movement by the Reserve Bank. It was interesting to see that the minutes of the Reserve Bank last meeting, showed that there was considerable discussion about whether it would be just a 0.25% drop in interest rates or whether it should be 0.5%. That in itself is a big shift for the Reserve Bank. So hopes have risen that we might see some more substantial drops over the next 12 months. Second interesting figures were housing affordability. Over the March 2025 quarter, housing affordability in Australia improved for the first time in 12 months. The average loan repayment now amounts to 48% of the median family income, an improvement of 2%, though a decline of 1% over the full year, which only meant that there was significantly worse housing affordability last year. This is the largest quarterly improvement in housing affordability since March quarter of 2016. Improvements in all states and territories except Northern Territory. Now we can attribute this to the improvement in two factors. One, rising median family incomes, which now sit at $2,561 per week. That's 1.1% above last quarter and 4% higher than last year. And due to the interest rate cuts, there's a 2.9% decrease in the average loan repayment, which is now at $5,323 per month. The good news for renters is the March quarter was the second consecutive quarter of modest improvements in affordability, except here in Queensland, where our continued population growth means that what is bad for renters is, in terms of higher rents, is good for investors and landlords to offset some of the cost of owning an investment. We can see the importance of first home buyers, who made up 35.7% of all owner-occupied dwelling loans commitments in the last quarter, even though they had declined by 1.1% annually. So some welcome relief, except a note of caution, and that is with the lowering interest rates, we're likely to see strengthening real estate prices. So that means for most people higher borrowings, which will mean more pressure on the household budget, which would usually indicate a drop in housing affordability to come. If buyers are looking for the right time to buy, then the current market conditions are certainly most favourable that they've been for some years for buyers, but don't expect that to continue. One final thought, the Queensland seller disclosure requirements come into effect from the 1st of August. Now this follows other states where there will be a requirement for sellers to provide a lot more disclosure about any defects or any other matters that buyers should be aware of when purchasing a property. A significant reduction on the buyer beware concept that we've lived with for so many years. So for those thinking of selling any time after August, just a note of caution, there will be some more complexities than we've had since Captain Cook arrived. If you want more information on this, please reach out to us at info@rwbg@raywhite.com. Look forward to welcoming so many of you here for the winter school holiday season, when so many others get a respite from the colder, harsher winter months. I look forward to seeing you in a fortnight's time.